G'day everyone, welcome back to Pete's Investing. Today is June 23rd, 2023. This is the spot silver price update. On our weekly and daily, we've broken down into a bearish momentum. And on our hourly, we've got a bullish divergence that's playing out at the moment. So we're looking at the weekly first, when the triple moving average of the price chart, the moving averages of the CCI 150, and this new oscillator we've introduced is breaking down, which it is at the moment. It's giving us this bearish signal. So you can see that big bearish candle this week on silver. On the daily, we did have this bearish divergence on the CCI versus a bullish divergence on the price chart. And that was our target when it broke below this channel. If you draw a channel between that range there, that was our initial target area. And if you go back to my previous silver videos, that was a Fibonacci range identified by that rectangle. I won't draw it for the sake of time, but that would have been a Fibonacci range in that range there, target area. Now, again, on the daily, we're still in a bearish momentum, and it looks like it's possibly approaching, it's broken through this support area at 2267, and it looks like it's approaching this lower diagonal ascending trend line, possibly going to be in this wedge in the coming days or weeks. On the hourly, though, just be mindful, we've got this bullish divergence that's currently playing out. So again, you can see there it's broken through, the price has broken through that support line, and it's a bearish price movement versus a bullish momentum on the CCI. The CCI generally tracks along with the price chart. In other words, you're going to get new highs, new lows, and so on. And when you do get divergence, like in this case back here when the CCI was declining, the price was increasing, that would have been our target area. Again, Fibonacci range there. That was 2 Fibonacci ranges were hit before it bounced up again. So the divergence doesn't necessarily mean it's going to continue further to the downside. In some cases it did, like in this case it went sideways for a while and it's plunged further down. Sometimes they just hit the range and bounce up again if it ever gets to that range. So there's a lot of possibilities. We just try to pick the probability, and at least 80% of the time they work. So in this case it's still in process. And for this to fail, we need to see the CCI break to the downside and break below that point there to invalidate this divergence. As well, we need to see the price chart continue to break to the downside. So this CCI needs to break below that point to be invalidated. Otherwise, if it continues up and the price keeps breaking up, then we're going to see a potential break. And then let me just draw out how this would be drawn in terms of tracking it. That's assuming it kept rising from, let's say kept rising from that point there. You would put it to the highest candle, which happens to be that one there in that divergence range. So if the price breaks much higher than that, and the CCI keeps going up and the price breaks above that channel upper line there, then we're going to have a target area, and a target area we'll draw will be, again, it's assuming it stops declining there and it keeps moving up from where it is now. Our initial target area will be this first, let me just pull it out a bit. That'll be that first Fibonacci range. So that's the first Fibonacci range between the 23% and the 38%. And we'll put in a secondary target between that range there, between the 38% and the 50%. Of course, it can break higher than that, or it can actually fail and break to the downside, as I said, if this divergence fails. So that'll be our initial target area. Should this continue and break above this channel line, that'll be our initial target area. Of course, it may just hit that area and then bounce back down. If it hits that support, it may just bounce back down and continue its decline. So there's a lot of possibilities, but that's how we look at the divergence playing out. But again, as a general rule, we look at the weekly, a daily, and hourly trends on this indicator, and we trade in the direction on these. You can see a back test that I've drawn here, a long back test and a short back test, and you only trade those when the weekly and daily timelines are aligned with the hourly. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also do weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.